Cryptocurrency. It's everywhere these days, isn't it? You see it on the news, in your social media feed, and even in casual conversations. Like, you can't even buy a pack of chewing gum without someone mentioning Bitcoin. It's become a part of our daily lives, whether we like it or not. It's the future of finance, apparently. Some say it's going to revolutionize the way we handle money, making transactions faster, cheaper, and more secure. Or maybe it's a bubble? Who knows? The debate is ongoing, with experts on both sides presenting compelling arguments. But one thing's for sure, people are trading it like crazy. The market is bustling with activity, and fortunes are being made and lost every day. And there are different ways to do it. From day trading to long-term investing, the strategies are as varied as the people who use them. Two popular options are spot trading and futures trading. Spot trading involves buying and selling the actual cryptocurrency, while futures trading is more about speculating on the price movements. Now, before you run away screaming, "This sounds too complicated," let me assure you, it's not as scary as it seems. With a little bit of knowledge, anyone can get started. In this little guide, we'll break down these trading types in a way that even Moss could understand. Hopefully, we'll cover the basics, the risks, and some tips to help you navigate this exciting new world. So grab a cup of coffee, sit back, and let's dive into the fascinating world of cryptocurrency trading together. By the end of this guide, you'll have a solid understanding of how it all works. And who knows, you might even feel confident enough to make your first trade. Let's get started. Spot trading is as straightforward as it gets. Imagine you walk into a shop, see a delicious chocolate bar, and decide to buy it. That's spot trading, but with crypto. You see the price of Bitcoin, Ethereum, or Dogecoin, don't judge, and you buy it at that exact moment. The transaction is immediate, and the cryptocurrency is yours. You can hold on to your digital loot, hoping it increases in value. Or you can sell it when you're ready to cash in. Simple, right? It's like buying and selling anything else online, just with more flashing charts and numbers. Futures trading is a bit more, let's say, adventurous. It's not for the faint-hearted and certainly not for those who shy away from risk. Imagine a bustling trading floor, screens flashing with the latest cryptocurrency prices, and traders making split-second decisions. The adrenaline is palpable. It's like betting on which way the price of a cryptocurrency will go in the future. Will it soar to new heights or crash to unforeseen lows? The stakes are high, and the potential rewards can be enormous. But remember, the risks are equally significant. You're essentially making a contract to buy or sell a specific amount of cryptocurrency at a specific price on a specific date. These contracts, known as futures, are legally binding agreements. They allow traders to speculate on the future price of cryptocurrencies without actually owning them at the time of the contract. For example, let's say you have a hunch that Bitcoin will be worth $1 gazillion next month. You might have read some promising news or analyzed some market trends that make you believe this. With futures trading, you can capitalize on this belief. With futures trading, you can agree to buy a certain amount of Bitcoin at today's price, but you'll only receive it next month. This means you're locking in the current price, hoping that the future price will be much higher. It's a strategic move that requires careful consideration and a bit of luck. If your hunch is right and the price skyrockets, you'll be laughing all the way to the digital bank. The profits can be substantial, and the feeling of having made the right call is exhilarating. It's the kind of success story that traders dream about. But if it plummets, well, let's just say you better have a strong stomach. The losses can be just as dramatic as the gains. It's a double-edged sword, and not everyone can handle the pressure. Futures trading is a high-stakes game, and only those with a clear strategy and the ability to stay calm under pressure should play. Section 4. Risky business. Spot versus futures. In the world of cryptocurrency trading, understanding the difference between spot and futures trading is crucial. Both spot and futures trading come with their own sets of risks. Each has its own unique challenges and potential rewards. With spot trading, the main risk is the volatility of the cryptocurrency market. Prices can change rapidly, sometimes within minutes or even seconds. Prices can fluctuate wildly, and you could lose a significant chunk of your investment if you're not careful. This unpredictability can be daunting for new traders. It's like riding a roller coaster blindfolded. Thrilling, but potentially nauseating. The highs can be exhilarating, but the lows can be devastating. Futures trading, on the other hand, is like riding that same roller coaster, but blindfolded, upside down, and with no safety harness. The stakes are higher, and the risks are amplified. The potential for both profit and loss is magnified. In futures trading, you're not just betting on the current price, but on where the price will be at a future date. You could make a killing, but you could also lose your shirt and pants, and maybe even your socks. The leverage involved in futures trading can lead to significant gains, but also substantial losses. It's essential to have a solid understanding of market trends and to stay updated with the latest news. One wrong move can lead to catastrophic losses. Education and continuous learning are key. Many successful traders spend years honing their skills and developing strategies to manage risks effectively. Utilizing risk management tools, such as stop-loss orders and understanding risk-reward ratios, can help mitigate some of the dangers involved. Collaboration and learning from experienced traders can also provide valuable insights. Sharing knowledge and strategies can be beneficial in navigating the complexities of both spot and futures trading. Ultimately, whether you choose spot or futures trading, it's important to approach it with caution, preparation, and a well-thought-out plan. Diversifying your investments and not putting all your eggs in one basket can also help in managing risks. Remember, the goal is not just to survive the roller coaster ride, but to enjoy the journey and come out ahead in the end. Section 5, Big Rewards, Bigger Risks. Of course, with great risk comes the potential for great reward. Spot trading can be profitable if you buy a cryptocurrency at a low price and sell it at a higher price. It's like buying low and selling high, but with more digital ones and zeros. Futures trading offers the potential for even higher profits due to leverage. Leverage is like borrowing money from the exchange to amplify your bets. It's like having a superpower that can either make you a superhero or turn you into a villain. Use it wisely, my friend. Section 6. So, which trading type is right for you? Well, that depends on your risk tolerance, your investment goals, and your general level of sanity. Spot trading is generally considered less risky and is a good option for beginners. It's like dipping your toes in the cryptocurrency pool before diving headfirst. Futures trading, on the other hand, is more suited for experienced traders who are comfortable with high risk and have a deep understanding of the market. It's like swimming with sharks. Exciting but potentially hazardous to your financial health. Section 7, join the Crypto Review crew. So there you have it, a crash course in spot and futures trading. If you're still feeling a bit lost, don't worry. The world of cryptocurrency can be confusing, even for the most tech-savvy among us. That's why you need a trusty guide to help you navigate the digital jungle. Subscribe to the Crypto Reviewer for more insights, analysis, and maybe even a few jokes along the way. We'll help you make sense of the crazy world of cryptocurrency, one Bitcoin at a time.